Welcome back. I'm Michael Bull. Today we are talking about the apartment market, and this is, of course, the Commercial Real Estate Show. We have Stephen DeFrancis here with Cortland Partners. We have Benno Rothschild here with Hartman Simons, and Jamie Tebow with the Atlanta Apartment Association. Hey guys, I think one of the things that we talked about in an earlier segment with Axiometrics is affordability. I mean, rents have really been rapidly increasing over several years, but yet wage growth has not kept up with it at all. Are your members concerned at all about affordability and these tenants really can keep paying these rents?
Absolutely. I mean, we're hit day in and day out on the on-site management offices about where the rents are heading and where they've been heading over time. And it's getting to a point where some people that are either have had difficulty finding a job or have not seen wage increase over the last few years are really having a difficult time making a decision as to whether they can stay in the communities or not. And not just current residents, but as you are getting permits for future constructions, there's a real legislative issue on what affordability measures will be put into the unit mix to get the construction approved or the permitting approved. So major cities are now really focusing on making sure there is an affordability plan as part of the construction process.
Yeah, well, that's interesting. And you talked about the increased construction costs and the cost of new supply. So you really have to get some really healthy rents depending on the market area you're in to justify new construction. And what about on your existing products, Stephen?
Yeah, you know, it's a difficult argument. Obviously, you know, from a social standpoint, you want to be sensitive to there are a number of folks whose incomes are not rising and yet rents are, and that's a real issue. But the flip side of that argument is this massive increase in new demand is really coming from folks who make considerably more than we're used to seeing in the, you know, the traditional multifamily rental space. So you've got an enormous increase in the overall demand, and most of that new demand is in a much higher income clientele, which offsets the severity of that issue. We're seeing it less in our portfolio because we tend to get a lot of folks who are moving or might be priced out of the brand new product because it's gotten so expensive, or just don't feel they need to pay that much. So we tend to see, you know, when we're rolling over for a new resident, we tend to see growth in the income, on the average income in our new clientele versus where we are, you know, at any certain point.
Yeah.
So because of the, you know, dynamics of our specific business plan, we tend to not be running into that issue as much.
Well, it's interesting to see that your income of your newer tenants is larger. Some of that because of kind of the nature of rentals today. I know years ago I was at an event and someone said they're renting an apartment, I would think bad about them. Now when they say, well, I don't own a home, I rent an apartment, I'm like, you lucky dog. Is some of that there's people like that maybe can buy if they wanted to, that there's just a different makeup of your tenants?
I would say it certainly is. I mean, the vast, you know, the market for multifamily is doing really well, and it's really, you know, the vast majority of folks in the space look at it as a lift being driven by an increase in overall demand.
Yeah.
But one of the underlying, you know, parts of that demand is you know, we're seeing a big disruption in the space, going from what was, you know, a huge commodity play, you know, for the first 40 years of multifamily, you know, going back to the mid-60s. Was that it was basically a place where folks lived until they didn't have to. You know, you moved in when you were newly graduated, newly divorced, newly widowed, newly something, generally something not great, and you stayed there until you didn't have to any longer.
Right.
So there was no, you know, there was no economic incentive to do it better, to manage better, build better properties, et cetera, because as soon as folks could move up and pay an increase, they tended to move out.
Yeah.
What we're seeing now is a very different clientele. It's much more so a consumer choice driven type of clientele, and that's what's allowing for, you know, folks, you know, those higher income folks are what's allowing these rents to continue to be absorbed at ever higher levels.
Yeah. And one of the ways that a lot of owners adjust their rents is through revenue management systems, right? Like the airlines use and the hotels use, that change the rates on apartments almost on a daily basis or maybe hourly basis in some cases. Stephen, are you guys using those, and how do you find them?
We do. The product we use is called Yield Star. We have found it very beneficial, but you have to use it. It's not a cure-all. Some folks use it religiously and take all the power away from the folks who are working at the community to make decisions. We have found that that's not really the best way to use it, for our model. We want to make sure that our folks on site continue to be empowered to interact with their customers and the residents, and make those decisions. But we use the software as, for guideposts, to make sure that we're current with where the market is, and that our associates working on site, stay current there.
Yeah, well, it's certainly a good product, and we've seen some increased returns with clients using Revenue Manager, so it's certainly something to consider. Well, stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back with more on the apartment market. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out creshow.com.